lead to a different outcome?
I really don't think it would affect the outcome much at all. It's just a delay. I mean, again, nobody can come in and convince anybody at the FTC to look at this differently because they can't meet with them. They can't work. So I don't know what would change the outcome either here or with regard to the Sprint T-Mobile merger. I mean, maybe something external happens that could change the outcome, but the mere fact that the government is not working is not going to lead to a change in outcome, in my opinion.
So what does this mean for consumers? What does this mean for users of these services?
What it means that you can file a complaint with the FCC or the FTC if you want, if you feel your privacy has been violated or you feel that a company has lied to you. And this is not just about tech companies, it's about companies across the board. The government can't help you, and the government won't help you. And that's really one interesting thing the FCC said today that was in Politico, is that it will not act on any consumer complaints. It will not work to promote competition in the broadband and media space. It will not engage in any consumer protection. The FCC actually told this to Politico. So yes, if you're a consumer and you're having a problem, with your broadband company or your cable company or with a tech company or any company that the FTC oversees, which is the entire economy basically, you've got no place to go to when it comes to certain complaints.
All right, well, we will be looking for any break in the stalemate. Gigi Sohn with the Georgetown Law Institute. Great to have your perspective here on the show. Thanks so much for weighing in. Coming up, will tech's tumble at the end of 2018 carry into the new year? We'll discuss what's to come for big tech stocks ahead. For years, the tech darlings that make up the FANGs have driven Wall Street higher, fueled by surging revenue, the prizing of growth over all else, and investor sentiment that the mega-cap tech companies could do no wrong. That narrative was derailed in 2018, even causing some to say that 2019 could be the year the tech bubble pops. Joining us to talk about what's in store for the FANGs in 2019, Bloomberg's Ryan Vlastelica. So what are we looking at as we head into this new year, Ryan?
Hi. Well, 2019 looks to be a much riskier year for the group overall. There's a lot of different factors, some company specific and some that are more macroeconomic that are probably going to be in view. Maybe the most obvious example is Facebook, which is facing a much riskier regulatory environment. You can maybe say the same thing for Alphabet, the parent company of Google. There are a lot of questions about user privacy, user data, and under a new bipartisan legislature, it's possible that we could see more aggressive stances being taken against these kinds of companies.
Facebook has made a slight comeback just over the last week, but still way down from those July highs. What's that about?
Well, I mean, these companies have all been extremely volatile for months now. Most of them have fallen deeply into bear market territory. People continue to like them as a growth story, but it's highly likely that you're going to see big moves in both directions, really probably for the next several months.
I do have a chart here in my GTV library showing the performance of a number of names over the last year. Talk to us about some of these other companies, Apple, Amazon, Netflix.
Well, all these companies are facing their own unique issues. So we'll start with Apple. The big issue there is what kind of demand is it seeing for its iPhones over the next year, and what is it going to look like as it begins to transition from a company built largely on unit sales into one that's geared largely around its services business and revenue derived from that. Amazon, it had a weaker than expected revenue read in its most recent quarter, as did Apple. So those are some concerns that people are going to be looking at. They are going to be looking for the next quarterly results. Maybe they will be able to avert some of that slide because, again, these are names that are very widely watched. They see a ton of growth. Amazon in particular, it's like for its web services division, its physical stores are something that's becoming of more interest to investors, on and like that. Netflix is a little bit of an anomaly. anomaly here. It hasn't had the kind of major headline risk that the other ones have faced, but it has such a high multiple that because the market in general has become a little bit less friendly to high growth stocks, it has really seen some steep declines.
Actually, Netflix closed out 2018 as the best performing of all the FANGs. You know, they're scheduled to have a big content drop this month, obviously continuing to invest billions and billions of dollars there. Can the momentum in the shares continue?
Well, that's the real question. We're entering an environment that's a lot less forgiving for high growth companies. Monetary policy is becoming tighter. Macroeconomic growth is showing signs of slowing. There are more risks of a recession, more talk about that. Where that leaves a stock like Netflix, which does trade at such a high multiple, really remains to be seen. But it used to be that investors were willing to forgive a lot just based on how much these companies were growing. Now they're not as willing to forgive that stuff, and they're going to need to show that it can stand up really on the numbers and not just the momentum.
What about regulatory issues? I mean, clearly the last couple of weeks have been an anomaly. Well, we hope. You know, we'll see how long the shutdown continues, but you know, we see Tim Cook, for example, making a concerted effort to engage with the administration, where it's been very different for Amazon CEO Jeff Bezos, who has quite a contentious relationship with the president. Do you think we'll see more of that?
Undoubtedly, that regulation is going to be a major subject for these names throughout 2019. I'm not sure how much the Bezos-Trump rivalry or whatever you want to call it is going to impact the shares. I'm not sure that would lead to regulation, but certainly for a name like Facebook, that has really been a subject of bipartisan criticism. Both parties have things that they have issues with the company. It is more likely there that you will see some kind of action. But again, no one really knows what that action would look like, how effective it would be, what it would mean for profits or margins or revenue growth going forward. So it's a major question mark, but it is more of a risk than it is an opportunity, I think most people would say.
Google has, largely dodged the media spotlight, though. When you look at the chart, shares are still also way down from July. You know, when it comes to Alphabet, what does the year hold?
Well, it's facing some of the same regulatory concerns as Facebook because it is another company that is built largely on data, on its users and so forth. So if there is an action taken against Facebook, it's likely to have an impact on Alphabet as well, but it hasn't had the kind of controversies that Facebook has faced. It's not quite as flashy as Netflix as far as its multiple, or as flashy as Amazon, for example. It's a little bit more of a mature company in terms of its valuation. That could provide a little bit of a buffer zone there. But again, it's another high growth name in a market that's less friendly to high growth stocks.
Well, one thing's for sure, there will be lots to talk about in terms of the ups and downs of all of these names in 2019. Bloomberg's Ryan Vlastelica, thanks so much for weighing in. Coming up, what is Amazon's brick and mortar strategy? Tech giant breaking into new industries, but for the company to disrupt another business. Later in the program, why it might be hard to find an original Netflix show if you live. That's next. This is Bloomberg. I'm Emily Chang in San Francisco. Back to the top story. First trading day of the year. This after disappointing model. An across-the-line price cut, raising. Bring in Bloomberg's Craig Trudell, who covers auto. So